Deal-O-rama. The past week has seen a flurry of biotech deals, headlined by Merck proposing to buy Terns for $6.7 billion for a chronic leukemia therapy, and Gilead proposing to buy Oro with partner Galapagos. The latter deal proposal comes as Gilead is looking to defend its position in HIV while resetting an eye in growing oncology. And across the Atlantic, new clinical trial regulations are on tap. For the UK, do they mark the start of a new era for the UK's life science sector? We speak with the head of MHRA, Lawrence Tallon, to find out. I'm Jeff Cranmer, and this is the BioCentury This Week podcast. Joining me today are my colleagues
Simon Fishburne, Editor-in-Chief.
Paul Bonanos, Director of Biopharma Intelligence.
And Lauren Martz, Executive Director of Biopharma Intelligence.
Okay, Paul, you have been doing double duty. You're our daily news editor, keeping us in line with everything that's happened in the biotech industry, but you're also our lead deals writer, and you had a bit of a busy week last week, Paul. Where do you want to start?
Oh, well, let's see. Yeah, you're right. There have been a lot of deals lately. I did have to write a few deal stories, and it's really been kind of all month. I mean, it's still March. We saw Servier by day one this month. That was early in the month. Things went relatively quiet for a bit. Our colleague called it spring break. But then since 2 Fridays ago, 3 big transactions. You all talked about Sinovation last week, selling the PI3K alpha program to Novartis. And since then, as you said, we have Gilead buying a private bispecifics developer called Oro on Wednesday for $1.7 billion upfront, and then Merck taking out the oncology company Terns for $6.7 billion on Thursday. There were also a couple smaller deals on Friday, and it looks like it's carrying over into this week. Do you want to talk about the Merck one first?
Yeah, let's start there, Paul. That was certainly the biggest of the week.
Yes, Merck buying Terns. So it's $6.7 billion. Terns, they've been around since 2017, went public in 2021, and it's a little bit of a comeback story. They had been pushing harder in metabolic disease for a while. They had an oral GLP-1, a couple other metabolic programs, but they pulled the plug on that last year, stopped investing in that area, which made their lead program, a program for chronic myelogenous leukemia, CML, called Terns 701. It's in the same class broadly as Gleevec, which is decades old, targeting BCR ABL. There are some newer ones in that class as well. Novartis notably has Scemblix, which, unlike Gleevec, works via an allosteric mechanism rather than an active site mechanism. Scemblix does have some warnings on its label: pancreatic toxicity, some blood pressure changes, food effects, and Terns 701 is designed to avoid all of that. Ideally, it can drive remissions where patients go off therapy for a while and maybe even has some curative potential. Terns 701 has some phase 1-2 data, looks like a clear efficacy signal with a good safety profile. And Merck, of course, has been doing M&A to fill the Keytruda gap when it goes off patent in a couple of years. Since about the middle of last year, Merck has bought a COPD company, Verona, and an infectious disease place, Cidara. It's close to $20 billion for those two. Terns is $6.7 billion, and they're adding that into the mix. Keytruda is a really big thing that's hard to replace. It's like what Michael Lewis wrote in Moneyball, where you can't replace Jason Giambi, you can just replace him in parts. You can't buy a $32 billion drug, right? This is one of the pieces that will hopefully fill in the gap when they lose patent protection.
Do we know how far they are to filling that gap with different pieces?
I haven't totted it up yet, but obviously if they put almost $20 billion out for COPD and infectious disease, they have high hopes for many billions in sales from those at peak. And it sounds like Terns is a multi-billion-dollar drug opportunity too.
Certainly worth totting up. I imagine Merck will continue to hunt for more deals. Let's talk about Gilead. Lauren had been digging into a Gilead story, and then all of a sudden they propose quite an interesting deal, leveraging their relationship with Galapagos. Oh, what's going on here? And Is this a done deal or is it still coming together?
It's partly done. Let's put it that way. I mean, there are a lot of moving parts, and one of them is still moving. That's another way to put it. Let's start with the Uro piece, right? Uro is what we've been calling a newco. I think our definition is it's innovation from Asia combined with Western VC money to form a global developer of the asset or assets from Asia. Yes, a startup company that's going to globalize an innovative bit from Asia. So that's what Uro was. It was a program from KeyMed, a Chinese company, and it was backed by a syndicate with founding investor Monograph Capital plus TPG Life Sciences, NEA, and Norwest, among others. The program is a T-cell engager that targets CD3 and BCMA, and it's in development for some immunological conditions, some anemias, cytopenias, Sjogren's syndrome, bullous pemphigoid. It's in phase 1/2 testing now, apparently with some clinical data, but Uro hasn't said much about that so far. So Gilead is looking to buy them or has proposed to buy them for 1.7 billion. We don't say it's done until it's done, but that deal has been cinched. And here's where it gets interesting. So Gilead, as you mentioned, had a deal with the Belgian company Galapagos dating back to 2019. Gilead paid more than $5 billion in cash and equity for access to Galapagos' pipeline. And so far, it has not amounted to very much. Galapagos has been through a lot. It doesn't really resemble its former self. It's been through a whole era with Paul Stoffels as CEO, tried to bring in some cell therapies, tried to separate the cell therapy business from the not cell therapy business. That didn't happen. Stoffels is gone. New CEO came in last year. Long story short, Galapagos still has a lot of cash, a very thin pipeline, and the idea has been that it would in-license something of value worth pursuing. And Gilead still owns about a quarter of Galapagos, has 2 board seats. They have some influence over what Galapagos does. And so the solution that Gilead and Galapagos are apparently working out, it's not final yet, but both have signaled their intent, is to integrate Uro's employees into Galapagos, split some of the development costs of the T-cell engager, and then Galapagos would share in the economics if things work out and the T-cell engager reaches the market. Does that all make sense? I mean, it's a naughty little arrangement, right? But it's a chance for Gilead to put Galapagos' cash to work for a worthwhile program that could set up both companies for a good outcome. It's obviously very early, but I think Uro's program has some promise, and it's a chance for Galapagos to reshape itself. They've been on the ropes for a long time. And
it sounds to me, and Lauren, I think you're going to talk a little bit more about Gilead, but from where I'm sitting, I mean, maybe it's a great deal, and I hope so, but it is a little bit like you said, there seem to be 2 companies that are a bit struggling. Both Galapagos was a high flyer. I think at some point we talked about it being a bellwether in Europe. It's certainly not at that kind of trajectory right now. Maybe this can help it turn around. And at the same time, Lauren, help me out here. I mean, Gilead, it seems to me that since their heyday of being fantastic in infectious disease, and maybe they are still in fantastic in infectious disease, they bought Kite. They've been trying to establish a really solid footprint in cancer and then I&I. And their story hasn't yet caught fire in my mind. Tell me how you're looking at this, because I think you did a bit of a deeper dive on Gilead.
I think that's fair, except for I don't think they're necessarily struggling in the infectious disease area. From
no, I don't think they're struggling.
Franchise is leader in that space. But yes,
I just want to clarify. Totally agree. Infectious disease, that story is very solid.
Yeah, it's super solid story in HIV that follows on from the HCV success, which is great. I think it hasn't necessarily been the same story in I&I and cancer, although there are a couple of really successful cancer programs that Gilead has. But within the I&I space, a lot of those misses, as Paul sort of alluded to, date back to the original Gilead deals, and even before the Galapagos deals, and even before the really broad 2019 Galapagos deal. There was a 2015 collaboration that was, I think, $750 million deal for filgotinib, which did not pan out. And after that, there were several programs through that broader deal that also didn't work out within the I&I space. When I spoke with Dietmar Berger, CMO of Gilead, a couple of weeks ago, he did talk about prioritizing I&I, building internally. This obviously is going externally as well. But this is the first T-cell engager within this I&I space for the company that I'm aware of. So it does give them a new modality and a new way to go after this hot area of B-cell depletion, whether that's through CAR Ts or T-cell engagers or even the more standard mAbs. So they are working within the CAR T-cell space to try to accomplish something similar with a bicistronic CAR T against CD19 and CD20. This just gives them another avenue into those kind of B-cell depletion amenable diseases.
Thanks, Lauren. So tell us about the rest in I&I, and then, maybe move to cancer. How's that kite deal worked out for them and more?
Sure. So within I&I, something I found interesting in their pipeline is that they have 2 phase 2 programs for IBD, for ulcerative colitis and Crohn's disease. And these are really innovative new mechanisms there, and a third in phase 1. So it seems like that's sort of becoming an area of focus, which has been historically a really difficult disease to treat with some of the other inflammatory disease mechanisms. In 2024, there was also a $4.3 billion acquisition of Sinobe Therapeutics, which gave the company Livdelzi, which is a primary biliary cholangitis therapy, which Dietmar Berger suggests is the anchor for this rebuilding of the I&I pipeline at Gilead. And then you also asked about cancer, which is the third pillar that the company has. So he mentioned that as Gilead has done historically, looking externally for oncology assets is something that they'll continue to do. So a lot of the M&A that Gilead has done over the past 5-10 years has been cancer focused. And there's definitely been some mixed success there. But the Kite acquisition, I think we can consider that a success. So Yescarta came out of that. That's the top selling CAR T cell therapy. It's a CD19 CAR T. And Gilead's working on a few other CAR Ts. We've seen some in vivo CAR T cell deals that have followed that one. That is sort of one of the anchors of the company's oncology portfolio and pipeline. And then they also have Trodelvy, which came from the Immunomedics deal, which I think is also considered a success. I mean, that was a huge acquisition and maybe got some criticism for the purchase price. But the company's moving this antibody drug conjugate into the early lines of treatment for breast cancer, for triple negative breast cancer, which could really expand the market and I think help it reach kind of the peak sales potential that Gilead was thinking about when it did that deal.
So, Lauren, I just wanted to ask you, I think about the Kite deal that in that day, that was a very edgy technology. I mean, it's still an edgy technology, actually, but, it was one of the first deals. They really did stick their neck out there. I think the Trodelvy deal, even then when they did that, that was quite a new technology. And I think what I'm asking you is whether, for my criticisms earlier of where Gilead is right now, maybe, do you see they have quite an appetite for very forward-thinking, next-generation science and technologies? They're not playing it safe with Me Too's or eighth in class. Is that a fair assessment?
I think that's fair. I think they're certainly sticking with building out where they have been successful in the past, other than those examples which are reaching into new spaces. But since then, we've seen a lot of, as I mentioned, building on the CAR T success with in vivo CAR Ts and other adjacent technologies. I haven't seen a ton of ADC activity after the Trodelvy deal, but I think that's probably fair.
I guess I'm thinking of our audience out there who might be thinking, would Gilead be interested in my asset? And what's it going to take for somebody to get interest from Gilead?
And I think that, he did mention that they are always on the lookout for oncology deals. So I think it's probably a fair assumption that innovative oncology is kind of on the table. We did just see the bispecific for I&I deal, which I think we can still say that's at the cutting edge. It's an incredibly crowded space. I think we're all trying to understand which of the bispecific T-cell engagers against BCMA or CD19 is going to end up successful and how they will differentiate and how activity and like the profile of the therapy for I&I differs with what you would want to see in oncology. It's certainly an innovative space. It's a crowded space, and I think we'll all see how that plays out.
All right. And you can read Lauren's story and Paul's story on both of the deals that we just discussed up on biocentury.com, or you can Click on the link in the show notes. We did tease that it was a big couple of weeks for deals. What else you got, Paul?
Oh, it's just worth mentioning there were a couple smaller ones on Friday that I thought were worth noting and somewhat interesting. So Excelergy, a venture-backed company with an I&I program, it's got some promise in allergy, food allergy, hives, maybe a couple more things that had just entered the clinic. Went to Novartis for an undisclosed amount up front, but the total deal value is $2 billion, including milestones. It looks like a strong exit for some VCs. The startup was spun out of Stanford, and Red Tree was the seed investor. Red Tree has close ties to Stanford and other West Coast institutions. They had done a Series A with Samsara and Dicheng joining Red Tree, so good for them. And then Transcend, a neuropsychiatric company with a PTSD product in the clinic, was acquired by Otsuka for $700 million upfront. There are also $525 million in milestones in that deal. So from Wednesday to Friday, 4 substantial deals, probably somewhere around $10 billion upfront in total. And then the last one this morning, it's much smaller, but Kezar Life Sciences acquired by Aurinia. Hard to say whether they're actually going to keep advancing the asset or whether this was a deal for a company trading below cash. Aurinia is now being steered by a new management team from Tang Capital, and Tang has Concentra that often does these sort of buy and shut down deals. So it's not clear exactly what the future of Kezar is, but that's one more M&A deal today.
Yeah, and Tang's been quite active with these deals, Paul. Are they keeping any companies alive, or are they just shutting them all down?
All of the deals, nearly all of them anyway, have a CVR should someone want to acquire the asset and advance it, or should there be more of a positive outcome. But to my knowledge, no deals have happened, and I don't think Concentra advances the assets. They tend to buy and keep the cash.
Right on. And you mentioned that Oro was set up as a newco under the newco model. I just wanted to drop KeyMed's name in there. KeyMed is one of the most active China-based companies behind the newco deals. It's kind of a double win for KeyMed. First getting the deal for Oro and then getting this takeout as well. So KeyMed, along with Jiangsu, Henri, two of the companies to really watch. Really deep pipelines. Henri had its earnings last week, and I think they said they have 100 innovative molecules in their pipeline. So expect more movement from both of those companies. All right, we're going to take a quick break, and then we're going to come back and hear about Simone's conversation with Lawrence Tallon, CEO of MHRA.
BioCentury this week is brought to you by the 26th Bioequity Europe in Prague, Czech Republic. Innovators everywhere are seeing speed as the driver of investment, partnering and success, speed to the clinic, speed to early human data, speed to de-risk assets. The question for European biotechs is clear. How do you compete in this arena? Facing new momentum from Asia and an unpredictable landscape in the US, the science in Europe is there. There are more experienced operators. And investor sentiment finally is turning. What's needed now is speed. In its 26th edition, Bioequity Europe travels to Central and Eastern Europe for the first time to explore emerging opportunities in the region and debate how European biotech can accelerate to compete and lead in today's world. Join us in Prague, May 4th to 6th for this destination event for investors and biopharma leaders. Register at bioequityeurope.com. Bioequity Europe, where Europe accelerates to compete.
Okay, in Bioequity Europe, first time in Central and Eastern Europe for the event, now in its 26th year. We have some limited spaces remaining for presenting companies. You can reach out to me if you have interest in nominating a company or nominating yourself to present. Advanced rates end this week. So rates will be going up. So it's a good time to jump in. Simone, all right. Let's head to the motherland. You got to sit down with Lawrence Tallon virtually on the eve of a major overhaul of new clinical trial regulations. What did you learn?
Oh, it was a really interesting conversation. I got to tell you, it was like more interesting live. I wish we'd recorded it. But we will have an opportunity actually at Grand Rounds in Amsterdam. We will have both Lawrence Tallon and Emma Cook. So opportunity to hear him live. But yeah, it's an interesting and exciting time, potentially. Let's do this whole potentially thing in the UK. The government is bringing in a series of clinical trial reforms that in fact predate, in their genesis, they predate Lawrence Tallon being CEO of MHRA. It's going to be his job to make sure they all work, and he's bringing a lot of other ideas to the table. So the clinical trials reform, which Jeff, I don't know, I'm not going to say that whole title and name of that law that is in there. But anyway,
quite a few parentheses.
There's a lot of parentheses going on there. I don't know what the British are doing in that. But anyway, it passed last year and it comes into force on April the 8th. And they're calling it the biggest overhaul in 20 years for clinical trials in the UK. Skeptics among you will say the bar was low, but I think that's a little cruel. It's certainly, there's a lot of new things in here. And I think that an important context to this is something that we've been talking about and will be talking about all year, which is this global race to improve the speed at which first-in-human data are generated and generally to improve clinical trial efficiencies for sponsors. So Lawrence Tallon talked about, I'll tell you 2 or 3 of the highlights. One is there's going to be a guaranteed 14-day first assessment of phase 1 clinical trials. So 14 days to get a turnaround, to get a response from MHRA. The second, which they call the other end of the spectrum, they call the lower risk end of the spectrum, is a notifiable scheme, right? So what that means is that if these are fairly low risk trials and they've already got thorough regulatory approval in sort of a reference regulator like the US or EU or Australia, then in the UK, instead of having to work for full clinical trial approval, basically within 14 days, if you haven't heard from them, if you haven't been given a reason to amend it, you can just go ahead. So that is like a removing unnecessary hurdles. And they think that about 1/5 of clinical trial volume will be in these notifiable schemes. And then, they're still working towards this. Here's what's interesting. They're working towards this 150-day goal between when you first apply and when the first patient is dosed. Now, within that, there's a 60-day part of that, which is under MHRA. They've already met that goal. I think they've actually even beaten that goal. But the remaining part of it is not entirely under Lawrence Tallon's responsibility. There are other players as well. And so this is where it gets interesting because there's NICE and there's the NHS. And so they have ILAP scheme and they have an aligned pathway, but generally the integrated system of the UK is something that Lawrence Tallon and his colleagues are trying to turn to their advantage. So instead of a lack of coordination between these bodies being something that slows things down, what they're trying to do is get them better aligned. And they say the government have given them incentives for that. And so actually make it more efficient.
Simone, did he talk at all about how the different government organizations are going to work together or the other ways that they're going to make this process more efficient?
Right. Yes, he absolutely did. So the first thing is he outlined a few specifics. The UK has an advantage, he says, of a single payer health system. So that allows them to create a single national contract with terms and conditions so that, you don't have to have multiple different contracts every time you go to a different site. And so there's one template. He did say that it would be a template that's adaptable to the local environment, but generally one of the things that can take sponsors a long time is back and forth over the contract. So this would be like a template. And because it's a single payer health system, it can be used throughout the UK. The other is he said that they're going to actually make data more available so that trial sponsors can know which sites are recruiting quickly and which are not doing so well. And so they can choose their trial sites. And then, they also want to make incentives flow to the right sites. And another thing, which is that they're going to use this NHS app. So we've talked about this from Patrick Vallance before, the Minister for Science. The point being that the UK has something that just about every place has, that not only is recruitment slow, but so many patients who would be eligible for trials just don't get into them. And so the idea of this app, which most people have, is that it would actually make it a lot easier for many patients who are eligible to get into these trials.
Simone, one thing that caught my eye when I was editing the piece was the aligned pathway. Can you, I love a good pathway with a regulatory organization. Can you break down what that's all about?
The aligned pathway is a new system whereby NICE, which is the sort of HTA for NHS, approves whether a drug is going to be covered by NHS. So where the NICE approval process and the MHRA, which is the regulatory approval process, don't happen in sequence, but in parallel. And so that's actually going to be the default. So they have very clear incentives for MHRA and NICE to work together, which has not been the case in the previous few years. But this new system has created incentives for them to do that. And they actually want that to be the default. So it's not that you have to have an agreement with NICE in order to get a drug approved by MHRA, but they feel that if you have that early on and they are aligned, then your path to market and to selling in the UK will be much easier. And just one last thing about that, because Steve Usden also talked to Lawrence Tallon, and he raised this several months ago when he spoke, where there's always this question of pricing in the UK, but even beyond that, there's still this point that the UK is only a small part of the market, right? Like I think Tallon puts it at 3%. So I think that his goal is to have approvals in the UK be a gateway to approvals in other jurisdictions, so that he could have alliances with these other regulatory authorities, whereby if it's approved in the UK, it might automatically be approved in certain other countries. And then that would mean that actually you're opening up a much bigger market by getting MHRA approval. So I think he's got some interesting ideas about how to make the UK a destination, and we'll see.
Certainly something we're going to be watching. Read the interview on biocentury.com. Click the link in the show notes. And while you're there, you can like us, subscribe to us. And this indeed is a topic we're going to stay with. Lauren, you have a couple of stories coming up. Anything to tease for us?
I'll be speaking with a few other regulators from the UK to get more details on the clinical trial reforms and learn a bit about how they're approaching rare diseases under the new regulations.
Excellent. Elsewhere in biotech, the Critical Path Institute's new 1 to Millions initiative is looking to build the shared infrastructure needed to operationalize FDA's plausible mechanism framework. Our colleague Steve Usden wrote a piece on that after speaking with the head of CPATH. Shrihas Tambe has been named CEO of Biocon. He's an insider tapped to lead the Indian biotech bellwether as it restructures to sort of create one Biocon. And Kodiak's VEGF conjugate has finally found its footing in diabetic retinopathy. You can read our colleague Tierney Baum's piece in biocentury.com. Thanks for tuning in. We'll be back next week with our second quarter public markets preview. Stephen Hansen will be joining us. And a special thanks to Kendall Square Orchestra, which provides the music for BioCentury this week. Thanks for tuning in.